So if you're buying a house or have ever bought a house and someone asks you anything about your interest rate, especially if you want to lock it, and you nodded at them like you understood, but deep down you were thinking, I have no idea what they're talking about and I don't know what I'm getting myself into, you're not alone. For those of you who don't know, my name is Kay, giving you the real keys to homeownership. And on this channel, I break down the home buying process in a way that you can understand so that your first buy is the right one. Now, if you're ready to buy and want to start your journey, but just don't know where to start, I do offer one-on-one consultations where I'll talk with you through your goals and budget so we can create a plan strategic just for you. The link for that is in my description below. And if you're not there just yet, be sure to like, comment, and subscribe so you're prepared for when that time comes. In today's video, I'm going to break down what a rate lock really is, what it does and does not control, and what us professionals assume that you guys as buyers know, but usually don't. Let's get into it. So a rate lock locks one thing, your interest rate. That's it, nothing less, nothing more. It does not lock your property taxes, homeowner's insurance, HOA dues, closing date, nor does it guarantee you an approval. When you get a mortgage, your payment has pieces: principal and interest, property taxes, and homeowner's insurance. You may also hear it referred to as a PITI payment, your PITI. And in mortgages, a rate lock controls the interest portion of that payment. That means that it locks the cost of borrowing that money for a limited amount of time. So say you have a loan for $350,000 and your rate is locked at 6.5%. That percentage determines how much money you have to pay to borrow that money over time. So say that $350,000 loan is over a 30-year period. That 6.5% is going to calculate how much interest you have to pay over 30 years, which is the fee that you have to pay to borrow that money. When you lock your rate, you're locking the cost of borrowing that money, but only for a set amount of days. Interest rates change daily, sometimes several times a day. So your mortgage professional is not cherry picking what interest rate they want you to have. More so, it moves with the market. That's why locking is a choice and is not something that's automatically done. The clock starts for you as the buyer as soon as you lock that rate. So if you've locked that 6.5% rate for 30 days, you have 30 days from the day that you locked to close on that loan before it expires. So when a lender locks your rate, they're committing to that rate in the market. But if at any time during the home buying process, if your timeline changes, that affects that commitment. And that's why extensions exist, but it can cost money. Another thing that most buyers don't realize is that delays are common in the home buying process. Appraisals come in late often, and sometimes they come in undervalue. Title issues are often found, and repairs can take longer than expected. That's when extensions can come in handy. And all that is as a buyer, you go say, hey, lender, or your lender will come to you and be like, we're having to extend your rate X amount of days, let's say 10 or 15 days, because the repairs on the roof won't be done until then. And then from there, they calculate the cost of what it'll be, if any, and that would be either added to the back end of your loan, or if it had to be up front, something that you would pay at closing. Now, I know as a buyer, we all want certainty and to know for sure that we're not going to mess anything up. You don't want to miss the perfect rate, nor pay more than you should have. But there is no perfect timing, and there is no perfect rate. There's only managing risk. Locking a rate down is not about predicting the future, but about protecting your budget. Now, there's a happy medium between this. All right, you don't want to lock too soon, and you don't want to wait too long to lock. But here's how locking can sometimes hurt you. As we talked about earlier, if your closing is delayed and your lock expires, you may have to pay to extend it. And sometimes that could be a lot of money because interest rates are paid in points or percentages. So if it takes 1/8 of a point for you to extend 10 or 15 days, that's extra monies that you're having to bring to closing, or you're adding to the back end of that loan. Also, if the rates drop after you lock, you don't automatically get the lower rate unless your lender has some kind of a float down option, which this instance doesn't happen often, but it is possible. Another problem could arise if you chose to lock at the shortest period of time and then your closing runs longer. You may end up having to pay more later. And if you lock too early before you're even under contract, that clock is ticking before you've even secured that property. Now, on the flip side, here's how not locking can hurt. If you are under contract and the rates increase and then you have to lock, your monthly payment is going to increase by however much. And even a slight 0.5% increase can significantly impact your monthly payment. Now, I know waiting feels safe because you're not committing to anything, but waiting can still be considered a risky decision. You, as the buyer, cannot time the market perfectly. Even us professionals cannot. So you don't want to wait in that area and miss your opportunity. Either way, you have to make a decision. But to help you out, here are some questions that you can ask your lender or research before you do decide to lock your interest rate. Ask yourself, your real estate agent, your lender, when is my closing date? Really look at how stable your timeline is. Every house, every deal, every offer is different. If you have a lot of repairs or contingencies that need to happen before you can close, you may need an extra 15 days. So you may need to lock for 45 days instead of 30. If your offer and your loan is pretty clear, dry cut and to the point, you may only need 30 days to get that loan closed. Also, hope for the best but prepare for the worst. So ask what happens if closing is delayed, and is there a cost to extend? And if there is one, do they have a ballpark of how much that will cost you? Also inquire if your lender has a float down option. And then after all of that, I think the most important question is, can I afford a higher payment if I do lock and rates are higher or have risen at that time? Remember, locking your rate, submitting an offer, anything in the home buying process should never be about fear, but it's all about strategy and making informed decisions. So, if no one has explained this clearly to you, that's not your fault. You definitely deserve to understand what you're signing before you sign it, and that's what I'm here for. So if you're ready to buy or want help understanding your timeline, schedule a consultation with me using the link in my description. And if you're not ready just yet, be sure to check out this next video about debt to income ratios so you're prepared when that time comes. Remember, when you know better, you buy smarter. Until next time, see you in the next one.